Guys, there is an art to lending, but you need an expert. We're going to talk about this morning 100K hacks when you're lending money with mortgage broker Zach from Shore. Stay tuned.
Billy is fired up this morning.
Fired up.
What are you fired up? What are you fired up for, Bill?
100K hacks. Tell me more.
Yes. It's true. There is an art to lending, like most crafts. There's an art to it, and this is the man that knows the do's and don'ts. We thought we wouldn't keep it to ourselves. We'd share him around with the social media people out there, our community.
So kind. Very thoughtful.
Picasso the painter. What's going on? You posted an email to us yesterday, and there was a lot of heavy bullet points going on in the finance market.
Yeah, I hope it wasn't too heavy, but it sounds like you read them all, which was good.
I did.
Yeah, I think last week was a big week for the whole country with the budget.
Yep.
The election called, and we got some CPI information as well. So there was a lot of information to check out throughout last week, and then sort of roll into this week. They've now got their election campaign rolling. There's an RBA meeting today, or was yesterday and today.
Yep.
And I think there's actually some more things coming out of the United States on Wednesday, I believe. Is some people are terming it Liberation Day for some of the tariffs that actually come into play from the US, which I think markets and governments around the world will take some time to digest. So busy couple of weeks and lots of numbers and data flying around.
I just want to know, is it relevant to the everyday Aussie, like all of this?
Yeah, I think it is. I suppose especially going into an election season, but I guess more to the front of everyone's mind, the inflation data, for those that didn't know, inflation rose 2.4%, which, yes, it still inflates the economy, but it's come down 0.1% from the 12 months to January and the 12 months to December. So again, it's it's trending in the direction that the RBA wants, albeit a little bit slower. Inflation's being a little bit stickier, but that's sort of bolstered by the services prices and the rental market, which are still quite buoyant and inflated. So there's still inflation, but it is within the range. But I don't know if it's enough for the RBA to cut again today. I think they cut, in February, which was a nice early cut to give some sentiment in the market. I'm not sure if it'll be enough for them to go again, and they might even remain, impartial until the election runs until May, and then there's another meeting on the 19th of May.
Love it.
Before we get into the 100K hacks, what's the everyday Aussie question that you get asked? Typically, like you turn up to an interview, there must be a series of questions that you get asked by your clients when you're opposite them.
Oh, especially right now, and since the most recent rate cut, the inquiry and the line of questioning is always around what can I borrow now? Because as we saw through COVID, borrowing capacities were hit 47%. So you could borrow $1 million, and then after COVID, that was down to $580,000. So you're almost halved. And so now, with the rate cuts, there's about a 2.5% give back every time they cut 25 basis points. However,
I love that.
Yeah, so a 25 basis point movement correlates with about a 2.5% borrowing capacity movement.
Stunning. Okay, so that's a typical question. What's number 2 question?
Where should I buy? But I can't really give that advice on where they should buy. It's like there's a lot of people that want to get into the market, but they just haven't done the research. They haven't looked at, what might apply to them, purely because the first step is understanding their borrowing capacity, and therefore that can inform their purchase decision. So what they can borrow plus their deposit can then, shape them to some real estate professionals like yourselves and show them what properties they can get into based on what their purchasing power is.
And before we move on to the 100K questions, what's the other question they ask when they first meet you? Top three questions.
Yeah, it's sort of, how is their current situation made better or improved? So typically I get people coming in with credit cards, afterpays, car loans, personal loans, HECS, and they might have, a small amount of savings, so they can't really do too much about it. Maybe they can reduce a credit card or close a credit card. If they do have a chunkier deposit that they may not want to use all of it towards a property, they may choose to pay out one of their car loans or pay some of their HECS down, or close a couple of credit cards. And therefore, with an unsecured liability, it impacts your borrowing power about 4 to 5 times the limit. So if you have a $10,000 credit card limit, it might be sitting at a zero balance, but that availability to spend is multiplied by 4.5 to 5 times. So $45,000 to $50,000 comes off your borrowing capacity purely by just having it open.
Wow.
Oh, so now let's move on to the 100K hacks, and I think we've just breached on one of them there. The credit card. What would be the number one thing where you go, oh shit, on a loan? This has to be this has to be changed in the future to get to borrow more money. Credit card.
Yeah. Look, if they've got existing loans, like let's say we've got an investor that's on interest-only investment loans, and they're really strapped for borrowing capacity. Maybe they can borrow, $300,000, and they want to get a little bit more juice out of the lemon. What we can do is put their interest-only loans to principal and interest. And whilst it's going to be a bit of a hit on cash flow, it's better in the eyes of the bank because you're paying off and building equity straight away. So interest only is great for cash flow. And, if your income supports it, you can continue and keep going interest only. But the way that the bank views it and the opportunity that may be there is that if you have a 30-year loan and a 2-year interest only period, the bank looks at you as if you're paying off that entire loan over 28 years. Because you're not paying any principal for the 2 years at interest only. So if we're paying it down, we're paying less interest. So therefore the banks favor that more in serviceability, whereby, if you're willing to and you can afford from a cash flow perspective to make those principal and interest repayments to then roll into another property, that's a bit of a strategy where we can assess, what the viability and the suitability of it is for it to actually unfold.
Didn't know that. Okay, squeezing the lemon. What's number 2 hack? That's a good hack. What's the number 2 hack?
Yeah, I think, look, right now I'm seeing, and it happens this time every year with business owners, sole traders, self-employed individuals, the guys that are running their own businesses, their companies, and they're all, realizing their paper profits right now, because with being self-employed, you can delay your tax return until May the following year. And therefore now the documentation process starts where their accountant is doing either their tax return, their company tax return, or their financial statements. And in those documents contain the critical details that all the major bank lenders, i.e. your best rate, best product, polished offerings are available to if you've got the documentation. Obviously the numbers need to stack from a profit standpoint and how we use those, and then what they're taking as an individual from their business. But It's now I'm doing a lot of self-employed deals where, they've had some good years. They've had, a good 2024 and a good 2023 if they've got 2 years to catch up on. And they're seeing the numbers that the bank needs to see. And we're running scenarios where they can either, upgrade their own ROC, or they can buy an investment property, buy a second or third investment property, or even, do something with their business. And I guess where the 100K hack is in the self-employed side of things is knowing which lender to use, and working with someone like me to look at your financials and utilize lenders that treat certain things differently, in terms of if your business is trading profitably but you have business liabilities, if you've got a car in your business, if you've got other liabilities in your business like equipment finance and stuff like that, there are certain lenders that will not expense those, whereas some lenders will expense them further. So serviceability is impacted by liabilities and interest repayments, including cars, equipment, finance, stuff like that inside the business. But there are certain lenders that won't expense them. So your borrowing capacity will increase depending on the lender.
Because Dr. Zach, when I speak to people and they go for a loan to someone they traditionally always use and their heart is broken, often game over. They don't realise what you've just said, that they've, maybe they were submitted incorrectly. So I think that's great what you said, that, fitting into the right hands of the right, putting your deal in the right hands of the right lender with the right attitude, with the right parameters, can mean the difference between no mullah or mullah.
Exactly right.
And the hard work's been done by the accountant with the tax returns, getting the paperwork together. So, it's like a two for one. Get it in front of the broker and just see if they can sharpen anything up for you.
Yes.
And there tends to be those deals on the table, particularly when rates have moved, especially in a downward.
Yeah, no, you're absolutely
direction.
right. I think, as I said, the inquiry is definitely grown this year since the rate cut. And yeah, it's just, it happens every year at this time when people are doing their docs.
Yeah.
And they look at the numbers and they're happy with them and they want to know, and we can help.
What about first home buyers and HECS debt? What does that look like?
Yeah, so generally we look at the monthly contribution. So if they're full-time employed on their pay slip, if they're earning over a certain amount, I think it's currently $65,000 or $75,000, their employer will be making contributions. So we look at what the contribution is under their pay slip, which will be written as STSL. I think it's like Student Training and Study Loans is the acronym for that. So that's what we pick up on, and then we just look at the period and then apply it to an expense field under HECS. It's not as much of a hit as, say, a credit card or a personal loan, but it is almost dollar for dollar.
Okay.
So if you've got a 20 grand HECS or a 30 grand HECS, it'll pretty much come off
20 or 30.
the same amount, unless of course you're on a really high income. The higher income, the more you're paying back.
Sure.
So then the more the expense comes off, but the sooner it's gone. So
But dollar for dollar.
yeah, pretty much.
Good to know.
Yeah, so look, there are some that there is a bit of a look forward with what the current government's thinking in removing the legislation around banks attributing student loans or study loans to an expense category, because it's it comes out of the pay packet. It's not and it's tax free, right? It's adjusted against CPI. It's not on taxable income. It's completely separate. So they're looking at doing that, which it might help quite a few people. Plenty of discussion around housing in the upcoming election, that's for sure.
So final hack, 400K.
Talk to a broker.
Yeah, everyone's different, right? And everyone's got different debts.
Does it still work if people rent their property out? So if, say, they decide to live with mum and dad instead and run it as an investment, does that help to borrow a little bit more money if they actually do that?
Yeah, absolutely. And that's a great point, Mark, because I'm seeing a lot of people either rent vesting or living at home. And when they're living at home, the opportunity with the banks, they might need a stat deck or a letter from the parents saying that, so-and-so is living here and doesn't have to pay board. But if you look at, say, an average rental in DY, it'd be what, $650 a week that you're paying?
2 bedrooms, a little bit more.
Yeah, so let's say $650 a week would be your expense if you're properly rent vesting, and that's your expense that's factored in for servicing. If you're living at home, if you're a single, then it changes to $650 a month as a notional rent expense. So you're getting back sort of
Got it.
75% of the utility of that position based on you living at home. So definitely a hack there for all the guys living at home wondering,
That's
you know,
good
if they're
hack.
going to move up the first property.
And Zach, do you have a spare room at your place?
For you, of course.
What about for me?
What about for Billy?
I'll be homeless in about 4 weeks.
You might need half a room, mate. You'll be right.
So, if there's anyone out there in the world, in the ether world of DY, that Billy needs a home, and our heart goes out to him soon. So, yeah, he could be rent vesting himself.
Very good. I'll have to run your numbers.
I
again.
like the home vesting
Yep.
option.
It's
Home rent free.
Yeah. That's the best.
home rent
That's good.
is better. And before you go, what are rates going to do in the next 12 months? What are rates going to do?
Oh, I think in the next 12 months, we might see a couple more cuts. It'll all be dependent on, what happens overseas and where our inflation tips after, maybe a change in government. But today, I reckon hold.
You can't use the word depends. You can't use the word depends. Of course it depends.
Yeah,
You
I
got
think
to
we'll see
tell us,
more cuts.
what's your punt? What is your punt on rates? Can't say depends in the next 12 months. How much and when?
3.85 by the next 12 months. That'll be the bottom rate.
That doesn't mean anything to average Australian. We need to know percentages and when. Percentage deduction. So is it 0.25% next month?
So what are we at now? We're at 4.1, and to get to 3.85, that's another.
By the end of the year?
That's another 25 basis points.
So you reckon we'll get you reckon we'll get 0.25% this year?
By the end of this year, yeah.
How far by? What month? Don't say
Well,
depends.
there's a meeting in July, and I think the unbiased opinion of the markets, which they haven't been right all the time, but maybe they've been a bit more correct than some of the bank economists. They're predicting July, maybe the next 0.25 rate cut. So that might see us through to the end of the year.
Love ya. You're the best, man. You're the best.
Didn't say depends.
But Billy, didn't say depends. Billy, anything else?
Talking to the expert. No, that's it. Give a broker a call if you haven't for the last 12 months. Could be something there on the table, free of charge. Just gonna make a phone call.
Yeah,
Zach, you're New South Wales wide.
Yeah, New South Wales wide. I do deals for clients in Queensland, Western Australia. I'm not really restricted geographically. Just find me on the phone. Yeah, exactly.
Zach from Shaw Financial. Give him a call. Google him. Billy will whack his details in here as well. Thank you for your help today. It's the question on everyone's lips at the moment with interest rates. So you're very kind to come on and offer your time. And guys, if you need a great guy, this is the guy we trust.
Thank you, Mark. Thank you, Billy.
Have a good day, guys.
See what happens.
Take care.